Hey guys, welcome back to our YouTube channel Accounts Guru Cool. Learn accounting online. So today we are here to discuss about one of the query what we have from one of our viewers is that suppose I have received 10K from Mr. A, then entry would be bank account debit to deferred revenue account. But how we can maintain the track that we received from A party? So this is related to the deferred revenue and the query is there and how the entry is also is plotted is that's there. That's a cash or bank account is going to debit to deferred revenue. And the second question is that how we can maintain the track that we received from A party. So considering this, first, we need to understand either this entry is correct or not. And second, how we are going to maintain the track of that. That's all we have to discuss. And request viewers to be with us till the end of this to get a more clarity on this query and how you're going to do the entry in the systems and how ERP work for that, how you have to maintain the tracker for that. That's all we have to discuss. And we need to know about the deferred revenue as well. So considering that, we request to be with us till the end and request viewers to like, share, and subscribe our channel to get a more insight related to accounting and finance. In addition to that, if you're looking for any sort of training related to accounting and finance, you can connect with us on our email ID accounts.gurukul@yahoo.com. And if you're looking for any sort of consultancy related to accounting and finance, you can connect with us on our email ID finance@divedeeperllp.in. So we'll jump towards this query and we'll discuss more on that. So again, when we are taking this scenario, what we have in a query is that when we have received the 10K from customer, then entry would be bank account debit to deferred revenue account credit. So that's the entry as per mentioned in this query is that bank account debit to deferred revenue account credit. Okay, so that's it's there in the query itself. But the question is going to be when we are crediting to the deferred revenue, first we need to understand the meaning of that and either this entry is going to be the correct or not. So the deferred revenue, it means that when we raise the invoice on the customers stating that we are going to provide the services in the future, that's going to be treated as a deferred revenue. So we are committing in the invoice itself. So we are raising the invoice for the future period, mentioning that the invoice or services is for the period of starting from this date to future date. That's going to be treated as a deferred revenue when we are promising to deliver the services in the future. Receiving the advance from customer and deferred revenue, that both term is different. That's both term is different. Even though advance received from customers and deferred revenue, both is going to treat as a liability for us, but the meaning and the documentations for that and the scenario when that's going to receive is entirely different. So we can't mix advance from customers and deferred revenue is treating as a one. So when we are raising the invoice on customers, giving example is that your software subscription charges. If you want to go for any softwares, you observe that the subscription charges for 2 months, 3 months, 1 year. Or if you're raising the AMC charges, annual maintenance charges invoice, that's going to be for the certain durations. Similarly, if you're going to raise any providing the warranty to your customers, then the warranty also is going to be for 1 year, 2 years. So something is that. So you are raising the invoice and promising in that invoice, we are going to deliver the services for certain period and we are taking the responsibility of that. So at the end, delivering the services, that's our responsibility. And till the time, if we haven't delivered the service, that's liability for us. And as and when we deliver the services, that's going to be revenue for us. So in this scenario, if you are stating that we receive the 10K from customers against the deferred revenue or against the what we have raised the invoice on customers, so your entry is not going to be this. Whenever you're considering for any ERP, your entry is going to be the first you have to raise the invoice on your customers. So that respective your customer account is going to be debit when you are raising the invoice on your customer. So the customer or your account receivables account is going to debit to your revenue account is going to credit. And if this amount is 10,000 and this is going to be for the certain period. So if assuming that this revenue we are committing for the period of 3 months, then we are promising to deliver the services or subscription charges for the 3 month, and that's our revenue. And we have raised the invoice on the customer. So if we have raised this on the 1st of August 2024, so this is going to be due from the AR. AR is going to raise the invoice for that. And the second, when we receive the payment from this against this raise the invoice, the AR is going to do the entry for that, assuming that we received the payment on 15th August, then entry is going to be your bank account debit to your customer account is going to be credit. So you receive the payment from your customers as well. But now, from the R2R standpoint, we have to do the analysis of that. And this analysis is going to be done by month end. When we are going to start the month end activities, we have to do the analysis of this and we have to check either this invoice is raised for the 1 month or this is for the 3 month. And from the description itself, we are able to know that, or knowing that what's the nature of business, we are able to know about that. And if that's related to the 3 month subscription charges. So in P&L, we have credited this entire 10,000 rupees as an revenue. So the first thing is that related to this is not going to be the entry in the systems. You can't do this straightway as a bank account debit to deferred revenue account credit. So the first related to raising the invoice, then receiving the payment, and this all is going to be done by the account receivable team. Nowhere the account R2R's role is coming to the pictures. But from the month end standpoint, we have to do the analysis and we have to when we know that this is not for the 1 month, so it means we have to take the one more entry as on 31st August 24. That's going to be, we have to reduce this revenue. Thus, the revenue account is going to debit to deferred revenue. Thus, entry is going to be related to the deferred revenue. And this is going to be the credit. This is for the 3 month, then what is going to be for the 2 month, that's related to, this is for 10,000 divided by 3. This is going to be this much for the 1 month, and we want to park it only related to the 2 month. So this 6,666 is going to be, or 67 is going to be parked towards the deferred revenue. And this is revenue for 2 month. So we are promising here to deliver the services for the 3 month. When we reach by end of the August, we deliver the services for the 1 month. But in the P&L, we have credited 10,000 as in revenue. So we have to reduce this from there, and the whatever is going to be for a future period, thus we have to transfer towards the revenue towards the balance sheets as a liability. So this 1 month is going to be parked into the P&L as an revenue, because for this month we already deliver the services for that period. That's reasons this is going to be considered as a revenue for August, and this remaining for the 2 month we have committed, we are going to deliver the subscription services for the next 2 months as well. And till the time we are not going to deliver this is going to be the liability for us. And that's as an deferred revenue. When we are going to reach in the month of September, when we deliver that services, then again we have to book the revenue, and that's going to be your deferred revenue account is going to debit to your revenue account is credit. And that's again is going to be for the 1 month, that's a 333. That's going to be the revenue booking for September. And same we have to do for October as well, since this is going to be for 3 months. And when we are going to do the same entry in the month of October as well, so by end of the October, if you see this 10,000 is in revenue, one revenue, then second we have reverse debited this, then again we have booked this revenue and this revenue. So if you see the booking of this revenue from the August, September, and October, so every month we have constantly booked the same revenue. That's the 3,333.33 pertaining to the what we deliver the services. Since this is the concept from the accrual concept says that as and when you deliver the services or render the goods, only you have the right to recognize that as a revenue. And if you haven't delivered, that's not going to be considered as a revenue. So therefore, revenue is one of the liability for us. And that's going to be either we have to deliver the services or we have to refund that amount to the customers. And till the times we are not going to deliver the services, that's going to be considered as a liability for us. That's a deferred revenue. Now, the next question is that how we can maintain the track that we received from the A party. So whenever we are doing this entry in the systems, whenever we are noting down this is the deferred revenue and we are crediting to the deferred revenue, on the same time, we have to maintain the schedule for deferred revenue. That's going to be tracked through the schedule. We have to prepare a schedules as like the fixed asset registers, prepaid expense schedules, similarly accrued expenses schedules. We have to prepare the deferred revenue schedules. And in that schedules, we have to add all these details. So from this date, from these customers against this invoice, we received this much is in payment. How much is the commitment in that to deliver the services, how much is need to be to expense off for a first month, and total invoice amount, less expense, less revenue booking for the first month, and balance is deferred revenue. So that tracker is going to be there. And that's reason this is going to be one part of your balance sheet reconciliation. So whatever is there in the balance sheet as in deferred revenue, you have to keep a schedules for that and keep a track from that schedule. So that's going to be give the clarity to the person every month end to know what he need to take the actions on that amount, since deferred revenue is your 1 GL and all the transaction if you have such kind of things is going to be hit to your deferred revenue account. So you have to keep a schedules, and in that schedules you have to add all the details related to the deferred revenue to whatever the customers whoever you have promised and raise the invoice that you are going to provide the services for certain period. So that period, how much is going to be the per month is revenue and what's going to be park in the deferred revenue. We have to keep a track of that. And at the end, what's there in the balance sheets need to match with that schedules. That's going to be work in the deferred revenue. So the answer for your two questions here is that the first, the bank account debit to deferred revenue account, that's not the correct entry. Second, how you have to maintain the track, then you have to maintain the track through the schedules and you have to maintain that schedules in Excels, which going to give the clarity related to what you have received from the customer. So that's the way your deferred revenue is going to be work. So thanks guys for being with us till the end, and I hope you got an answer related to this query. And request viewers to like, share, and subscribe our channel to get a more insight related to accounting and finance. If you want to go for any sort of training related to accounting and finance, you can connect with us on our email ID, this accounts.gurukul@yahoo.com. Thank you.